All right, so I've talked about stuff like this before, but I wanted to talk about it again. There's a couple posts I wanted to bring up here. This is from Lindsay Stamp. Boomers bought homes for 100,000 that are worth 1.5 million now. We can buy Bitcoin for 100K that'll be worth 1.5 million in a couple decades. I think it'll be faster than that, but nonetheless, I think we'll look back and realize this was the most obvious play imaginable. And then this post from Anthony Pompliano. The S&P is down 85% in Bitcoin terms since 2020. The Bitcoin rate of return for an investment is all that matters moving forward. So first things first, if you get value out of the video, please like and subscribe. Check out those links below. So getting right into it here, I've talked about this several times, I think for at least a year now, saying that Bitcoin is this generation's chance at making a lot of money. And this is how people are going to view it, right? 20, 30 years from now, people are going to view people that bought Bitcoin now the same way that people view boomers that bought houses, right? They're going to say, and I don't think it's necessarily the same thing, because to a large degree, buying the house in a lot of ways is luck, because when you look at immigration and overregulation and stuff like that, I think that's played into excess, inflated housing prices, for lack of a better way of putting it. But when it comes to Bitcoin, there's only so many Bitcoin, and there's going to be an endless demand for it, and therefore the price is going to go up forever. Now, obviously, I don't know what's going to happen 100 years from now, but 200 years from now. But over the next generation or two, inflation's going to continue to run hot, and Bitcoin's going to outperform real estate, stocks, gold, you name it, because Bitcoin is more scarce than any other of those things. And when you do a cost-benefit analysis, it's simply better, right? It's better than gold. Gold obviously has some things that are better, but overwhelming majority of things Bitcoin is better at. Same goes for real estate. Same goes for stocks, right? And this proves it, right? This proves it. The S&P is down 85% against Bitcoin since 2020. The Bitcoin rate of return for an investment is all that matters moving forward. So this is the thing, like, everything is going to underperform Bitcoin. Bitcoin's going to outperform everything. Now, a lot of people say, oh, well, it's very hard to say, because when you're a complete newbie, if I were to go back, I wouldn't necessarily dump everything I had into Bitcoin, right? Because I didn't understand it, and if things would have went wrong, for all we know, I would have dumped it, and that would be the end of that. I still wouldn't have any, right? So I still think that dollar cost averaging is the best strategy, right? Find a chunk of money every week, every month, and simply put a certain amount in. And it's really easier than ever, right? It's really easier than ever. It's not like, I don't remember. I've only been around for about 5-ish years, but it's not like, 15 or even 10 years ago where it was basically just, shady exchanges that you had to buy from. Now it's as easy as you can possibly imagine, right? So I don't think that that's an excuse anymore. But when it comes down to it, the S&P is up like, I think, almost 100% over the last 5 years. So it's not like it's underperformed by any means, but Bitcoin is still dominated, right? If you go back to the summer of 2020, Bitcoin would have been, I think it was less than $10,000 US, and we're at 120,000 at the time of me making this video. So it's up 12x in that amount of time. The S&P is up about 1x, and I've said before, I think Bitcoin probably will have, to some degree, diminishing returns over time, but my base case is still 20-ish% return over the next decade or two. And that's double, maybe even slightly over double what the S&P historically returns, right? It typically returns, 7, 8%, 9%, depending on what period of time you're going off. Are you reinvesting dividends or not? There's a lot that plays into it, but that 7 to 10% is the typically cited number. So, and if anything, I probably would expect a slightly lower amount. So if it's returning 7%, then you're probably going to triple the returns of the S&P. And the S&P is probably going to do pretty good, right? The S&P is going to destroy, most other stock indexes. It's probably, going to keep up with real estate. Gold typically, beats inflation by a little bit. So that's what I think is going to happen, right? And when it comes to this, right, this is the main point. So many people nowadays, especially younger people, are complaining about, oh, it's too hard to get by, I can't afford stuff, yada, yada, yada. And the escape hatch is staring you in the face. Now, again, it's going to take time, right? It's going to take time. Like, I don't view it as a get-rich-quick scheme. I view it as you put a certain amount of money in every month and you get rich over decades, right? So if you want to get rich quick scheme, this isn't for you. But I mean, if you look at Bitcoin, there's no four-year period of time in its history to where if you would have bought and simply waited 4 years or more, you would be down. And when it comes to stocks, when it comes to real estate, when it comes to there's no other asset on the planet that can say that. At least assets that have a half-decent market cap. I'm sure there's something with a tiny market cap that you can say that about, but there's no other asset class. So that's one of the many things. When people talk about, Bitcoin, it's risky. And I think the problem that the big problem people make when it comes to that is that they see that Bitcoin is volatile, and too many amateur investors, and even a lot of quote-unquote professionals, let's be honest, they view volatility and risk as being completely synonymous. But they're not, right? They're really not. I mean, when you look at the best performing stocks, right? I mean, is Nvidia, is Palantir, like, I don't know what the beta is off the top of my head, but I would bet money that they're more than the market average. So that's the thing. When it comes to investing, volatility is not a bad word. Volatility is not a bad thing. Now, to be fair, a lot of really poor stocks are very volatile. That's true. But there's also a very clear correlation between the best performing stocks. And the big thing when it comes to the people that don't like Bitcoin, the big thing is none of what they say ever turns out to be true, right? None of what they say. They have excuses. Just the stuff like, it's a Ponzi scheme, and like, okay, if it's a Ponzi scheme, are you betting against it? Right? And especially when it comes to, rates were being were being raised in 2022, 2023. Were you betting against it? Like, a lot of these people probably weren't, even though it went down during that time. Right? So if you're not willing to put your money where your mouth is, number one, I don't really care what you have to say. And number two, you need to have a theory that's falsifiable, right? So the theory would be something along the lines of, hey, I don't like Bitcoin. I think it's not a good investment. But if this happens, then I'll admit I'm wrong. And it would need to be reasonable, because a lot of times people, they'll come up with something that's completely unreasonable and just impossible, right? Like, Bitcoin is up like 30x compared to gold over the last decade. How many people, like, yeah, I'm a former gold bug and now I like Bitcoin. Like, very few of these people exist. There's a lot of them that like both, but typically those are people that have always liked both. Right? Like, so this is the big thing that people get wrong, I think, in life, but especially in investing, right? But just in general as well, is that so many people, they just cannot admit they're wrong about anything. Like, people, when it comes to investing, whenever you talk with an average Joe, typically it's always, what's your hot stock? What crypto do you like? Or are you day trading? Or what's your strategy? Or something along those lines. But what they don't realize is the two most important things when it comes to investing is, number one, the psychology of it. Because the reason the average person is not good at investing, it's not necessarily because they don't pick good stocks or whatever. It's because they don't understand the psychology of it, right? They see the S&P go down 20% and it's sell, and you got to move to cash, and they move to cash and they wait for the market to come up another 20% and they get nowhere, right? So that's the thing, right? That's the first thing. But the other big thing too is being able to admit you're wrong. Where, like, the big problem the average person faces is that when it comes to life in general, most people, they can't admit they're wrong about anything. And for a lot of people, I think there's some people that just genuinely, that they just can't comprehend it. It's too far above them. They're not smart enough to figure it out. But there's a lot of people that are smart enough to figure it out. And they just don't, right? They really just don't. But the thing, like, and again, when it comes to Bitcoin, is eventually it's going to be too hard for them to ignore. Because right now, the vast majority of people They probably don't know someone that owns Bitcoin, and if they do, they probably, it's not like they've made tons of money on it, right? But if you have, you know, 0.1 Bitcoin right now, I think that's going to be $1 million someday. And 0.1 Bitcoin is like, whatever, 30,000 Canadian, like 20,000 US. Actually less, probably like 15 US, 12 or 13, 14 US. So that's not a lot of money, right? Can the average person come up with $10,000 or $15,000? Like, yeah, right? So there's really nothing holding people back. And again, in the end, you really just have to dollar cost average. Like, personally, my strategy has almost always been dollar cost averaging, right? I almost never come across large sums of money. In fact, I can't think of any times. So the strategy has always been dollar cost average. Just buy a certain amount every day, every month, every week, and leave it at that. And the good thing about that too is that really flattens out the volatility of it, right? That really flattens out the volatility of it, and it really gives you more of a long-term mindset. So again, what I'm going to leave it on here is when you look at governments, when you look at the deficits that most major Western, or even basically every government on the planet, but at least the major Western governments, typically all of these governments have deficits that are unsustainable. And they have two options, right? They can massively cut spending, which, number one, will guarantee they won't get elected and they'll be hated by the public. And on top of that, it'll cause a fairly severe recession, which will further drive, you know, chaos and resentment and anger. Or they can just continue papering over it and running progressively larger deficits over and over again. Anyone with a brain knows that there's a 99% chance that they're going to just continue to run larger and larger deficits, knowing that it number one, it makes them way more popular, and number two, it's just more conceivable, right? Because, and this is the other thing too, let's just say that you are the guy that comes in and massively cuts spending. Now, I think you need to do it. In my personal opinion, I think that they should be cutting spending, but I would do it more progressively, right? I would just say, hey, you know, you got to cut spending by 1 or 2% per year until the budget is balanced, and then after that, you got to run, you know, 1, 2, 3, 4, 5% surpluses until the debt's paid off. And it might take 50 years for that to happen, but if that's what it's going to take, then so be it. Because if you got to do that compared to, you know, have a modern day Great Depression, which very well could happen, I think that's what you got to do. But again, the governments are going to keep, like, again, overwhelmingly likely they're just going to keep running larger and larger deficits. And what does that mean? People are going to have to find ways to shield themselves from inflation, and the best way of doing that is Bitcoin. And the last thing I'll leave it on here is that one of the most obvious things when it comes to success in investing or even life in general is just basic pattern recognition. And this is another thing that the average person out there just sucks at. They can't recognize patterns if their life depended on it. But when it comes to investing, right, what is the most obvious pattern when it comes to investing going back post-financial crisis? The most obvious pattern is governments want low interest rates. They want to continue to spend more and more money, which is going to drive inflation. What is the best asset that is shield yourself against inflation during that time? It's Bitcoin, and it's not even close. Now again, technically like an Nvidia or something like that is close, but they're a single stock, and they're a single stock that is clearly overvalued, right? So that's my 2 cents on that. I've said this time and time again. Like I said, I think that, again, we're going to look back 20 or 30 years from now, and people are going to be like, oh, you're so lucky. We got to tax you and all this garbage. But again, when we're looking back on it, it's going to be blatantly obvious to even the average person. But right now, it's really only blatantly obvious to the really smart people. So anyway, I'm going to leave it at that. Like I said at the start of the video, if you liked it, please like, subscribe, comment, and stay tuned for more.